And this is the first recording for today. It is before London. We are in the pre-opening on London. As you can see, we've got, this is the euro-dollar 4-hour chart, and I want to do a euro-dollar analysis now. This is 128.52. We went as low as 128.30 something, so we've got our leg to the downside from the 129 something towards the 128 something. So we've got more than 100 pips for this leg to the downside, as presented on the analysis last Monday, so 2 days ago. So all good and clear. Now what to look from this level, and trying to see what kind of structure we have on the euro dollar so far. And this is a 4-hour chart, and if the analysis that I would do now is going to prove correct, then the next recording, or the recording after London goes home today, it's going to go deeply into more details regarding this scenario. Now, as you can see, 128.53, and what to look for next year. Well, if these are the highs in the 137 area, you know that when I do the analysis, or when you do an analysis, I strongly advise you to mark your highs and your lows on your chart, just for you to have an idea about what's the range. Even if this is a high range, so this is 137, this is 127 something, so quite a high range, but nevertheless. Now, based on the fact that this structure channels too well and the corrections are too good, so it's still too small, and they resemble, it is still possible that this be only the end of an A wave of a higher degree, and let's make it 16. And then we have here, as you very well know, we have here an ABC as a correction. So A of a lower degree, let's make it red. Then the B wave here, and then the C wave here. So you have A, B, C as a zigzag to the upside, or as you can see also the C wave here has 61.8 out of the entire A wave red. So that must be the end of a B wave, but not B wave green. Attention, okay? So not B wave green, but B wave of a lower degree. I would say that B wave of 14. Now, if you take a Fibonacci retracement, you go from the highs in the 137 area, and you go towards the low here, towards the lows here, 127.46, then you see that the B wave failed exactly at the 50% area here, which might mean nothing, but nevertheless, it might just give us a clue for future move to the upside. Sorry, this is not a B, but this is an A. So the A, and then after this A wave to the upside, we are looking for a B wave to the downside. And as you can see, as you probably noticed from the name of this recording, contracting triangle as a reversal pattern. Now you see that here we have 1, 2, 3 higher lows. Now price is right on those, is right on that third low, 128.55 now. So it doesn't necessarily mean that what I'm doing now is going to hold, but nevertheless, until those lows are going to be broken. So we have here 120, let me see, the low here is 127.96, then 128.21, and now we had the low 128.38. So until these lows are going to be broken, now this looks like a rising a series of higher lows, and it might be the case that this is a possible contracting triangle like this. And contracting triangle appears only in two cases, either in a fourth wave type, and when they appear on a fourth wave type, let me put it like this, when they appear on a fourth wave type, then they are continuation pattern, or when they appear as being on part of a correction, part of a complex correction. It seems that this might be part of a correction with the B wave here, and then the C wave to the downside being only here. Okay, so A, B, C almost equal, then an X wave here, and after this X wave we have a nice contracting triangle in the form of an A, B, C, D, and now the E wave being done to the downside, so A, B, C, D, E, and there you go. This is being called a double. This is being called, let me write here, that this is being called a double correction or a double combination, and it ends in a contracting triangle as noted earlier. So contracting triangle as a reversal pattern. Now all eyes are going to be on this trend line to the upside. If this trend line to the upside is going to break to the upside, then we have the prerequisites, so to say, for a C wave that should move higher than this A wave, and this C wave normally should go into the 75% territory, and in this case that would be the triangle A, and then only the B wave here green. Now it is very much possible, so only the B wave here, it is very much possible that such a complex correction appear at the end of a second wave. So you might have a 1 here, okay, and a second wave here, so 1, 2, and then to move to the upside like this. Anyways, these double combinations are extremely powerful moves, and if price breaks to the upside from this one, it should be quite a ride to the upside. Now, I don't know how many of you are familiar with the pitchfork analysis, but if you take an Andrews pitchfork from here and you put it right on top of the 137, then you put it on the A wave here, and then on the C wave here, you are seeing this is your pitchfork. Now, why is this important? In pitchfork you have three important elements. This is the medium line, this is the lower medium line, and this is called the upper medium line. As you can see, even this pitchfork is a bearish one. I mean, price is going to the downside. The price action stays most of the time in the upper part between the medium line and the upper medium line, so in the upper part of this pitchfork, and that makes it important in terms of future price action. So what to look for? See here, it has been tested. Look for it now to be tested here. This is going to be an important confluence area. Judging by the values here, is something around 130 area. Yet again 130 area. But once broken, then I will project this line forward, and we'll have probably more clues about what to come. Now, judging by how price looks now, I would favor something like from this moment, providing, so this is 128.40, 128.59, okay, 128.60 area for the euro dollar. So providing 28.21 and 27.86 hold, then I would say that this would be something like this, let's say, and then retest the trend line like this trend line of this triangle, and then to try to go for the highs here, C, B, and this should be the B of a higher degree, but not necessarily. Anyways, if we go to those highs, if we go that high, definitely the 137 would be inside, and we're going to look for clues here regarding what to expect and how to interpret the future price action. Now, this is what I want to show you today before London comes in. We're still having something like 40 minutes until then. And if price goes according to this analysis like this, then the next recording, or maybe both recordings today, the one that should come, will deal with this contraction triangle in more details on the 1 hour chart eventually, and looking for continuation of this analysis. Our next recording is going to come before New York opens today. So until then, stay safe on the market. And